Hey, this is Elliot from Victory Charts. I'm just going to do a little video for you guys today showing you how slippage can really affect a trade. So what I have here is I have a system on crude oil, and I've actually run this system before, so I know how the real results will come out in live trade. And so this is the system. It's just a simple breakout system, and the stop loss is a max of 500 or the opposing signal, and the profit target is $100, and it will start to trail after $100. And so we'll take a look at how slippage can affect this system. So here are the system parameters over a 60-day period, and it made a ton of money, and it had a really good win percentage because of the big stops and small targets. I've talked about that before in some of my blog posts. And so we can see here it has a $41 trade profit, average trade profit. So it's a pretty small margin, doesn't leave you a lot of room for error. So when you start adding slippage and commissions in, things can go bad quick. But first I want to show you, and you'll run into a lot of this online. People will show you these equity curves and they look amazing. I mean, it tricked me into trading it for a while, and I'll show you what happens when you start to add slippage, and then I'll talk to you about a concept that's really important about how slippage can actually affect the entire system as a whole, not just minusing $20 from each trade. So I'm gonna add slippage and commissions in here. So we'll do a $3 commission, and we'll do $10 slippage, which is pretty small, honestly, because like I said, I've traded this system before live, and it was a lot bigger than that. So just keep this number in mind, $13,441 average trade profit. And when I add those in there, we can see that cuts almost 60% of the profits, and it drops that by about 60%. So all of a sudden now you're working with a $15 margin of profit and being negative. So there's really no room for error, and that's taking small commissions or small slippage into account. And so now let me show you what I mean by when I say it can really affect the entire trade. So we have 3 trades here, all of which would have been affected by slippage. And let me explain what I mean by that. So on this first trade, the entry was right here at, we can see 46.49, so one tick at a break of this level. And now if this trade had slipped, let's say 2 to 3 ticks, this profit target may not have been met. And so that doesn't seem like a very big deal, because okay, fine, you would have just lost. But instead of making this $100 or $120, in fact I'll tell you what it was about $120, you'd have actually lost about $250. And so what that means is that's a swing in equity of about $350. So right there, that's already a misrepresentation of what would actually happen, because this is an exact fill and an exact fill, and that's not realistic. And so that would have been a complete loser with a swing in equity of about $300. This next one here, same thing. If it had not got filled here, one tick at the entry, it may not have met this profit target, and it would have gone on to hit it eventually, but you would have had only one winning trade here as opposed to 2. And so that's another swing in equity of about $100 to $200. And the same holds true for this trade, and this is probably the best example. So the entry here would have been 46.82, or 83, sorry, and that's where it took it, 46.83, and it only met the profit target by one tick. You can see here price reversed right after that. And so if this target had not been met, this would have been, not only would it have not been a $100 winner, it would have been about a $500 loser. And so that's a swing in equity of about $600. And so that's how this can really be misrepresented when you look at an equity curve. And this equity curve is still not bad, but this is only taking into account just minus $10 from each trade when I enter it in the system. It doesn't actually take into account how the trade happens and what happens if the target is not really met because of slippage. And so that's a really important concept and something to really think about before you run a system and while you're trading. So I hope this helps. I'll see you next time.